Hello, everyone. Welcome to the next episode of the Generational Growth Podcast, where we teach people to grow and give with abundance. We are at a time and point in history where people are going to have to start taking care of people. Cat's out of the bag. Corporations and governments are not going to save us. On top of that, financial education is not taught. My goal is to teach employees and small business owners their financial education so they could get to their why quicker. I feel like everyone wants to give back in some type of meaningful way, but they're not necessarily sure how. This podcast serves as an asset to allow you to do that in a more efficient manner. For this episode, we will be talking with my friend Ron. He is a credit repair specialist and integrates financial literacy and education into his entire system of what he's doing. So we had a great deep dive into credit and how you can put yourself in a better position so you could go scale and get to your why quicker. So I really hope you enjoyed this conversation and stay tuned for more content. All right, good morning, everyone. In this episode, we're going to be talking with my friend Ron. Me and him connected on LinkedIn. And what I like about Ron is we got connected in a really values forward manner. So I feel like a lot of times when you're investing, the majority of the focus is focused on, the upper 5%. I feel like Ron really focuses on that bottom 95%, really helping the hardworking people and helping them get into a better financial position, focuses a lot on financial planning. And what he does in the background, I'll let him go into his process, but is credit repair, getting people to a position to where they are able to move in a more efficient manner. But Ron, where's a good place to start to understand how you got into this position?
No, great question. Happy to be here and been looking forward to it. But my name, for everyone out there listening, is Ron Monaco. I have come from the financial world. I have over 2 decades. Started in mortgage lending, also worked in automotive finance, and now work as a credit and financial educator and customer advocate side of the financial world. So how we started this company, we just started this company this year. My dear friend and my business partner, Chris Massantuno, and I, both from the dealership side of things, Chris being the owner of the dealerships in which I represented, we just saw a lot of fallout, with our community and having the ability to get what they need when they needed it. And we needed to kind of figure out what the fall off was. And the true fall off in today's society is it's not necessarily people have a financial problem in terms of making income, and it's not necessarily a credit problem. It's really an education problem. Understanding how the financial system works, how to monitor your credit accurately, understanding your report, and being able to kind of build your financial infrastructure from there. So that way you can turn the no's to yeses or not put yourself in positions where ultimately you're having more financial tensions in your life. It all starts with that core foundation. So we are very much in our infancy with Requalified 360, but very excited for the successes to this point and where we're trending.
Cool. Tell me a little bit more about your real estate journey. So that's a big part of what I do. I mesh whole life with turnkey real estate and everything, and that's been a big part of what I did. So talk to me about your dealership experience, and then how you transitioned into the world of real estate, and what sparked you to come into start your own business and everything.
Yeah, so I started as a very young man in the mortgage lending business, basically fresh out of high school, right? As a snot-nosed kid that was better at giving advice than taking his own advice. I came from a very blue-collar, hardworking family, and I really had to kind of learn, through my peers, but also through life experience. So I was in the mortgage industry for the better part of 16 years. The industry, I was there, in what we would call the Wild West days before licensing was required, and post licensing, I was an individually multi-state licensed loan officer. The industry really, especially right around the time COVID had hit, really kind of went a different direction. I had I had some things that I wasn't necessarily personally happy with, and due to relationships, again, referencing my dear friend Chris, he kind of opened the door for me to come into automotive finance from there. And I had never sold a car, done anything like that in my life, but I understood financials, right? I understood how lenders operate. And that was something that led me over 6 years in the automotive industry with great success, because, it's most people tend to have one side of the desk or the other. The benefit of me coming in on the automotive sector was I understood from the lender's perspective what it is they're looking to qualify an individual on, as opposed to just understanding how to get somebody approved, right? So having the understanding and knowledge as far as the way an underwriter thinks and the way that they actually qualify, what's beyond the score, what's beyond, the multi-layers of the onion. And we saw a lot of great success from that, but, ultimately, as successful as we were for the dealership side of things, we saw a tremendous amount of fallout. We saw so many good, hardworking people that did all the right things, right, and still weren't getting what was going to meet not only their financial but their personal needs. And I can't tell you, Austin, how many times somebody came to me and was like, Ron, I don't really get it, right? I've been at my job X amount of years, right? I pay my bills on time. I know I can afford X, Y, and Z, and yet, I'm either getting, the red X, or I'm being told that I kind of got to be, forced to eat squat in a position that is going to put me in unaffordability, and not understanding what was beyond that. And again, it really, to kind of take a deeper dive into somebody's credit, that's kind of the way we're brought up. Work hard, pay your bills. Work hard, pay your bills. But it goes to so many more layers than that, specifically when it comes to consistency and habits, right? Because that's how an underwriter looks at things. You might even have a decent enough score, but if history says that every now and again, when the bottom falls out and you might be in a bit of a spot, maybe you're going to make some unwise choices. Maybe you're going to overextend yourself. And lenders, especially today, are so protective of themselves, right? I mean, that's an underwriter's job, essentially, and I guess to call it for what it really is to find a reason not to lend you the money, right? To protect their interest, right? So with having that knowledge, it's eye-opening how many people just don't have it, man. So Chris and I, for all of these leads and all of these denials, or maybe fake approvals, if you want to call them that, we realized that with our backgrounds, with my financial background, with his entrepreneurship, that we could probably build a company rather, that yes, we do focus on credit restoration, but we really try to go next level than that. It's really about understanding the building of your financial blueprint, getting the understanding of how and why lenders qualify you or don't qualify you, and protecting yourself. So that way, ultimately, and again, having referenced my blue collar, hardworking family, your financial frustrations don't transcend to the next generation, right? Because that's where it really starts. And again, so early on in our infancy with the company, we're seeing some really great wins for our clients, and we want to do it the right way. We don't want to be a gimmick. We're not going to offer you instant results. I mean, you'll see that, and if you want to throw away your money, there's definitely plenty of characters in the industry. But if you're really frustrated, with the process, with where you stand today, and you want somebody that is willing to just kind of take the gloves off, be honest, have an open conversation, not from the side of judgment, but from the side of understanding what it is to be in your shoes, consistency is key. It's about making all the small steps consistently for the bigger picture. And that's how we're here, man.
Yeah, your story makes a lot of sense because you identified this problem when you were in the car industry. You saw people not get approved. You had experience as a lender and you identified those issues. Hey, these are XYZ, why people are not getting approved. I want to dive deep there and I want to unpack all that and what you're seeing is the major hiccups, and we'll get there. But first, can you kind of construct the system of your business from a bird's eye view? Like, what is the actual system that you do? You mentioned that it's not just, credit repair. There is an entire system behind there. So lay that out for us, and then we'll dive into those specific points that people should focus on to make sure they don't enter those waters of not being able to, progress the way in a manner that they want to.
Right. And step one is it all starts with a conversation, right? Maybe somebody's frustrated, maybe somebody is looking for mentorship and guidance because they don't understand the systems. So just having an open conversation in regard to what a client potentially feels like is holding them back, and also understanding their goals. So everybody has a unique situation. Maybe you just want a car approval. Maybe you're looking to buy a home in 5 years. Maybe you want to start a business. So understanding your goals before we really kind of take a deep dive into the personal finances, it's important because what's important to my client is important to me. And that's where I understand the gap in the education. Right. So just having that candid conversation and getting people to drop their guard, man, because that's the one thing, and we all feel it, particularly when it comes to our finances and our credit. We're very guarded, right? This is not something we have open conversations about on the daily. And I think often what I really find is that people almost think their credit, for example, is kind of a reflection of their character. And I think it's really important, first and foremost, to get through to somebody that it is not, and to let them know that, all your credit really is your credit score, for example. It's a reflection of your current financial system, right? It's a reflection of the consistencies that you're making in your day-to-day life. Those things can be taught and fixed. Once we kind of get that guard dropped, then it's really taking a deep dive. Yes, I do a comprehensive, a 3 bureau full underwriting value to audit. And this tells me a lot, right? You know, this tells me more than, just your payment structure. It could be, there's so many, again, I can't stress it enough. There's so many layers to this. It's really about, I'm going to learn when life gets tight, the decisions you make, how you choose to overextend yourself. Maybe, you're just out of range with your utilization. Maybe you don't have a healthy enough mix of credit. Maybe you're very minimalistic and people don't want to take a flyer on you. So, but also I'm looking for erroneous things as well, admittedly, because, the real fact of the matter is, Consumer Reports came out this year and said almost 40% of people have at least one erroneous item reporting on their credit. And the first step of the education is getting people to monitor their own credit, because that's another big piece of the puzzle. Is we talk about all the healths in life, right, Austin? We talk about your medical health, we talk about mental health. We're not addressing our financial health, and that really starts from the monitoring side, understanding where you currently stand, what a lender is evaluating you on, and what you can improve upon. You might not be able to read that story yourself, but that's why there's people like me in this world that want to give you the education and make that and give you more clarity at the end of the day in how that system works. It's just, at the end of the day, man, it's really once we kind of go through it with a fine tooth comb, then I can help be the mentor, right? Then I can help build the roadmap to success, understanding at that point what somebody has coming in, what their obligations are going out, what they can do to protect themselves. And the biggest thing, because I deal with a lot of other entrepreneurs, right? And I do obviously handle a very large market of clients that can't get over the hump, but I also handle a pretty steady load of clients that, make plenty of income. Maybe you're looking for other investment opportunities, and aren't seeing the fruits of their labor. And the real reason to that, and what I find most often than not, is because before we think about investing, before we, think you have to make sure any cracks in your foundation are sealed, right? And what I see so much financial friction that people don't really realize that they're putting themselves into. And what I mean by that is people that are paying higher interest rates, people that are paying higher insurance rates, having to pay security deposits. These costs all add up, right? And it's hard to, build generational wealth if you haven't relieved your own financial infrastructure from within. And once you can kind of, get that core, then we can really start building out for the future. So the beauty of, being a financial literacy coach, or being a credit repair specialist, is there's no only one demographic. Everybody can use a little checkup, right? Like going back to the health side of things, because just like on the physical, or on the on your actual health side, your physical health, if we only went and saw a doctor every time we needed emergency surgery, well, we're kind of already behind the eight ball, right? So being able to know how to monitor your credit and your finances, knowing how to budget correctly, and relieve that financial tension, that helps fix a lot of problems before the bleeding really begins. And there's just so many layers. Like I said, there's no one size fits all in this industry. It really just depends on what somebody's goals are and what they're looking to do long term.
I want to bring back what you said on financial health, because I liked that angle a lot. We focus on regular health, we go to the gym, etc., blah, 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 but we tend not to focus on financial health. This isn't me saying like money is, the key of life or anything, but life is kind of a game of money. It's not saying it's the most important thing in your life, or you should put this at the top of the pedestal, but you need money to like function in life. That's just a fact. But we kind of constructed our culture around us not paying attention to it. We aren't really concerned about our financial health, and there tends to be our egos get intertwined with our finances. I think it's because it's tied to our ego, like you were saying before. It tends to be tied to our character, and it's tied to that tied to us, and it can be a little bit difficult to have some conversations, especially when there's some things potentially that are needed for improvement. But let's go back. You mentioned go back to those factors that people should be paying attention to. You mentioned consistency. I heard that term a couple times. So let's lay out like a top three, two or three issues that you see. Let's create an avatar. You're at the car dealership. Bob's trying to get a car and his credit's all messed up. Like, what are like the top three things that you're seeing that you would jump in, repair with the average avatar that you're encountering?
Yeah. So, well, the number one thing that, especially in today's day and age, is, there's no prettier way, or, pretty or uglier way to say it. We are definitely living in kind of this awkward financial crisis of a time unlike we've ever seen in our lifetime, right? We've seen the cost of living, the cost of breathing jump up exponentially.
The cost of breathing, yeah. For real.
and people are definitely utilizing the third parties more. And what I mean by that is leaning on credit cards harder. So you're seeing utilizations jump up, and people think just because at the very minimum they make their payment every month that, it should report, either correctly, or they should have a healthier score than they do. But again, this ties into, all of those layers. It's just, if you're banks, for example, lenders, they want to see that you have access to funds in the time, yes, of a desperation, but how you act upon, those available funds. So just to keep the lights on, just to keep groceries in the fridge, we're seeing people utilize more and more credit utilization than, we've probably seen in a long time. And it's not because they're irresponsible, but because they are living in a time of desperation. They're trying to do anything they can to make ends meet, but they're definitely compounding issues. And sometimes these things can be easier said than done, and especially if you're trying to self-evaluate, right? And that's where partnership comes in, because at the end of the day, we just, as much ego as we have, we don't know everything. I was in the automotive industry, but I couldn't, hop under the hood of your car and fix it. If something went awry, as much as I know the industry, it's, partnerships are important, right? Mentorships, partnerships, that's actually something that you had said when I had originally reached out is, about opportunities and how people help people, right? At the end of the day, that really stuck out to me because that's exactly what I see even in this industry is, we have to put the pride, the ego down and let it rest a little bit. And it's okay. It's okay to fail, right? It's, as long as you're trying. At the end of the day, failure isn't is in my opinion, it's not tied to your inability to be successful. I mean, I've always said it this way: if we're not failing, we're not trying. If we're not trying, we're not learning, right? So, we can't be afraid to fail as long as we get up and we, most importantly, are trying to change the habits. So number one is the utilization. Number two that I tend to see is, a lot of people that in desperate times that kind of burn themselves by not being more involved in their financial process. Say you need a car, for example. Not every guy sitting at the finance desk at the dealership is created equal or gives two cents about dragging you through the mud. I see so many people that have, I've seen people in a 12-month period have over 100 inquiries because they went to 3 dealerships that just drug them through the mud. And, so being more involved and hands-on in that process, you don't have to be an expert to still understand what your finances are and to have a knowledge of what the guy on the other side of the desk is doing, what his intent is. A good finance person should be able to look at your bureau and realistically know the banks they work with and shop you to the right places, not just blast you to 20 banks on their screen because they're just looking for the yes, right? So being more hands-on and involved. So I see people that are just littered with inquiries, and it goes beyond just those kind of moments. Kind of tying back to number one in the utilization is people are getting maxed out, they're getting tied out, and the next bill's coming, or they don't want to see their kids go hungry, so all of a sudden you're applying for the next credit card. You're doing, you're damning yourself because again, you're thinking in terms of desperation, right? And desperation is a killer in the finance world. But again, you can correct that mindset. But I see a lot of opportunities, particularly when it comes back to the first example within the automotive world. A lot of those things can't actually be legally disputable, because if you see a guy that's run you, within a 30-day time frame to the same bank multiple times, that's somebody being careless, and there's a good chance that we can do some back end work for you. But again, you have to be able to kind of read the book to see it. And then number three that I would see is, and this ties into the lack of education, it's actually understanding beyond surface level what's on your credit, right? I firmly believe in many industries, you get what you pay for, and we all have the free credit monitoring apps. We all have these things on our phone, but they only tell us a pretty minimal part of the story. I think some of the systems out there are pretty outdated without naming names, but what I would say is maybe you had a bad debt, maybe you had a charge off, 5-6 years ago, and you're scrolling on the free app and you happen to see it, and it looks familiar, right? I remember that got charged off at this date, but it doesn't mean that it's reporting correctly. In fact, I see so frequently, depending on the type of debt, somebody that maybe has an old charge account that was charged off, they owe $5,000. And again, at surface level, they just kind of live with it because they're like, yeah, it's an ugly mark in collections, but they don't realize that charge account is still reporting with a credit limit, or it's reporting every month as past due, which in a collection state, it can't, right? That you can't borrow from something in a collection account, and you're not owed on a monthly structure as you were when it was an active account. So again, without understanding how to read through the lines of your credit report and have appropriate monitoring, these things slip through the cracks all the time, and they're correctable, and in many cases disputable. So having appropriate investing a little bit of money, right? I mean, we all justify going to Starbucks in the morning or whatever the case may be, to spend $20 a month and have appropriate monitoring and have appropriate identity protections. It's absolutely worth the investment because again, without throwing too many stones at the free industry, so to speak, but we all see it, right? Again, we all have the free apps, and what do we see in our email every other day? Ron, this credit card would look great in your wallet. Well, that kind of defeats the purpose of strengthening somebody's credit and financial profile to put a new card in it, or to give them, newer aged credit, or to put them in a position to, potentially heighten their utilization. But at the end of the day, a free platform, it's got to pay its own bills somehow. So there's partnerships and things of that involved. So people being more involved, again, with the monitoring, investing in themselves, is something that needs to happen. But again, not being able to read between the lines and needing that education, which, so it's okay. Not everybody, again, because we didn't, we talked about it before. Educational systems didn't teach about this. We didn't talk about it at Sunday dinner. If you came from a hardworking family that did what they had to do to survive, like me, you can't teach what you haven't mastered, right? And that's what I meant before when I say it kind of transcends to the next generation. So we got to break that cycle, break that wheel. So those are three big things that I get very involved with. And most importantly, I try to educate my clients on how to protect themselves and how to do better for themselves.
Well, let's have a conversation on those metrics. So you mentioned, credit score doesn't necessarily capture the full picture.
Definitely.
Educate me on what goes into a credit score, because ignorantly from an outside point of view, like I know mine, like I know it's in a good range, but what goes into that calculation and what other KPIs should we be focused on if we're trying to get in a better spot?
Yeah, I mean, the obvious and most preached about ones are cliche because they're true, right? Obviously, making on-time payments in the current FICO system that's widely used, that your on-time payments are going to make up 35% of your score. Your utilization of credit, right? Having the right mix and and how many accounts that you have, that also is going to have a great deal of effect. We all need to have a revolving account or two, like the charge card, but obviously utilizing it correctly. And we all need a healthy installment setup, right? Whether it's your automotive or a personal loan from the bank, and wisely utilizing those funds. And another part of it, again, going just on the obvious ones first, is going to be simply how many accounts you are getting at one time. I often see a lot of people that take 3-4 credit cards in within a 6-month period, and that's very impulsive, right? Looking. So if you're going to go into certain situations, those decisions obviously are going to be utilized against you with somebody who's assessing risk. Impulse is something we want to control in the financial world, but going deeper beyond that, because here's the thing, and I say it all the time: credit score in itself, it's what's promoted, it's what's sexy, so to speak, right? It's what everybody knows and knows what a good score looks like.
Yeah.
But it's not indicative of all of the opportunities that are going to be present in your life. I have seen in over 2 decades, Austin, I've seen people with a 650 credit score get better terms than somebody with a 720 credit score. And that's because of the underwriting factors, right? It's because of the way a lender evaluates risk. When you get onto a file, your file gets onto an underwriter's desk, what they're really looking for is the consistency in your actions, right? How you protected yourself, how you prepared yourself for potential crisis, right? Because I've seen somebody with a 720 credit score that, if really time says that when a financial crisis happens in your life, you're going to max yourself out, even though, you have a history of paying it down. Lenders don't want to see that. They don't want to see you with a habit and a history of raising, your limits or raising your utilization to protect yourself. Because again, when you do that, when you live that way, even if you've survived and been tactful to this point, then you're building, on a stack of cards. So you're one financial crisis, you're one desperate situation, you're one life event away from having everything spiral out of control. So score, while it's the, as I joke and say, it's the sexy part of the industry that everybody wants to talk about, it's really about what's beneath the score. But as far as generating the score in itself, be minimalistic in terms of only have what you need. Only apply for new credit when you absolutely need it. If you go to your clothing retailer, I don't care if they can save you $200 on your order today. Don't take the card. You don't need it. Right. So it's about keeping yourself minimalistic to what you need to do to survive, not opening too many accounts at once, making, yes, your payments on time, but allowing yourself to be viewed in the lending risk world, if you will, the ability to be looked at as though you are not impulsive, that you only finance what you need when you need. And again, the score is what it is. I mean, actually, one thing everybody should be looking into is there's a new credit module they're about to release, and it's called FICO 10. And I'm kind of, really, understanding it and understanding that these systems change all the time, right? There's FICO 2, 3, 4, right? Everyone's heard of FICO 8, which isn't, typically really used in much. And now they're going to be rolling out a FICO 10. It's going to have some different some different criteria as far as, what these bureaus are using to generate your score. So that, and then again, that ties all back to education is, we act as a society like we don't have time for much, right? But here's the thing, you're making time for yourself. I don't care if it's 10 minutes a day, I don't care if it's a half an hour a week. Look into these things, look into the finance and credit world, educate yourself on something new. You're only investing in yourself. So, constantly being aware of what's out there, how it could impact you. There's information for days out there, and it's just, we make too many excuses as to why our time spread so thin. But then where are we always, right? We're always right here with the phone, right? I mean, we have the time, we just have to make it. And that's a commitment people have to make to themselves.
I've always had a curious question on the actual credit scores and everything. Like I don't give a damn. Like mine's always been between like 750 and like low 800s. What's
Yeah.
like with the variability there between like the 750 and the low 800s? And I've always wondered like if I wanted to increase it more for someone that's in that 700 range, like how do you increase that more?
Yeah.
Because that person may be making payments, they never had a late fee or whatever. Like what's the deal there? How do people get into those higher scores?
Yeah, 100%. That's a really good question, man. And typically what I see as far as the most basic answer to that, it's the amount of accounts they have. Because again, when you're generating a score, the risk side of it is where this comes in, is you can keep your utilizations low. But again, the way an underwriter, for example, would look at something is you might have 6 credit card accounts and say you're at a 720 credit score, and you never go over 30% of utilization, you make every payment on time, you're doing structurally all the right things. But then somebody walks in and only has 2 accounts and they're an 800, right? And they do all the same things. And it's like, well, why is their score? Well, because again, this goes a little bit to the potential for impulsivity, right? So, for example, kind of tying back to an example in the mortgage world, I had a client that was very much, this was actually a very big conversation. They didn't understand why they weren't an 800 and above. And basically, or why they weren't getting an A plus tier as opposed to an A minus tier on the mortgage lending scale. And realistically, what I kind of had to teach them was a lender has to look at you. So they had zero balances across. They had a lot of accounts, more than six. We'll put it that way. But a lender isn't just going to say, oh, okay, well, as far as this debt to income ratio, we're going to just say, well, he's not carrying any balances, so we can't utilize that against him. They can't do that. They have to prepare in risk for the fallout, for crisis, right? So if you have the availability to too many accounts, essentially you have the ability to put yourself into a really bad spot, right? Because
Okay, that makes sense.
you know what I mean? Like,
Yeah.
so the biggest answer as far as good credit to great credit, and most commonly that I've seen, is just the amount of accounts that you have, because that's being factored in against you. Because, usually, at least in my days in mortgage, for their debt to income ratio, for example, we had to utilize 1% of their available credit limit against them, even if they weren't carrying a balance. Because if they utilize that card, and you have to act as though they likely eventually will, that's something that's going to pop up on the DTI scale. So usually it's the amount of accounts, and that's kind of why I say it's more so about not looking impulsive and looking more stable in terms of, okay, Austin only finances what he needs when he needs. He's got a couple of rainy day credit cards, revolving available funds for that rainy day, or if that crisis pops up. But if you got 10 of those, it doesn't matter how good you are with them. It's going to work against you to some degree.
Have you ever handled any type of like credit card points hackers or anything like that? Like I'm a big fan of all the travel points, and that there's a whole game inside of there. So have you encountered those people, and what would you say there? I've definitely seen it on the business side too. There's the 0%, 0% loans from the credit cards for the first year, and like I've seen that work great for some people. So there's all these benefits out there. How would you handle that conversation if that person came to you?
Yeah, no, and we see it all the time. And again, it's a unique situation. It's about being able to say what you need versus what you want, right? I mean, again, these companies are so good at marketing their product. They're so good at luring you in, and they're so good at selling the benefit, right? So, but do you need the benefit? If you're a high level executive and you gotta hop on Delta Airlines every other day, and you're racking it up, then it probably might make sense for you, because there are ways that you can caveat that into potential savings for yourself. It's because it's money you're going to spend ultimately anyway. So if you
Yeah.
can make that work for you, if you can get into a point system that makes it work for you, then great. That makes a lot of sense. But kind of going back to like why I brought up the retail side of it before, retailers, more so than I see necessarily like the frequent flyers, those kind of things, I see major revolving accounts that tend to more so be linked to retailers. And again, because maybe you got kids need clothes, they grow all the time. I got 3 of them, believe me, I get it. So you're like, well, when you get this flyer in the mail of $50 off just for using your card, and then they'll take an additional 30% off for being a card holder, it's kind of easy to fall into the caveat of that. And it's like, and that's where, again, I think if we simplify it to the point of, and we live in such a technological age, it sounds archaic to say it, but you sometimes got to go back old school, put the technology down, grab the composition notebook, needs versus wants, right? And if you are putting yourself in a position to spend based off the benefit, then you're already putting yourself behind. If the benefit can truly benefit your day-to-day living, that's a different story. So it's really about checks and balances, man. I mean, if you're going to go spend an extra $200, $300, $400 on clothes so you can save 50
Yeah.
for clothes that you didn't need or whatever that retail setting is, then we're right back into the conversation of being impulsive as opposed to being stringent and financing only what you need.
Okay. Yeah, that all tracks. We got about 10 more minutes here. Let's talk about financial education. That's something that we both overlapped on. We talked about the importance of it and how it's integrated into your business and everything. And it was a big part of my story and why I launched what I'm doing behind the scenes.
Yeah.
When I was an active duty Army officer, I went to brigade battalion commander, the boss's boss and everything. I walked into the room. I was like, hey, what should I be doing with my finances as a fresh new lieutenant? And while I was a cadet at West Point, and traditional advice is to just dollar cost average the market, max out all your different government accounts. And then ignorantly, before I got my education, I was using a high yield savings account to save up for my rental down payments. And that really led me to my turning point because I was trying to scale, but each time I would save up to a down payment, let's call it 40K, I'd go back down to zero. There is no ability to leverage those systems. And on top of that, you're taxed the entire time. What I've found
Yep.
through my experience, being a consultant and everything, is most people invest to have some type of passive income. They want to go down this passive income cash flow path, but they're not aligned on that path. And then they're driving the wrong vehicle for that destination. That's why I transitioned to whole life because, I used that as an asset to go buy other assets and it allowed me to move in a much more efficient manner. So that's a little bit on my story. But in regards to financial education, we talked about credit, we talked about all these different factors. What are some other major factors that you're seeing that people don't understand in the financial education / literacy space?
Yeah. Well, again, from what I had touched on before, it's about understanding what your financial tensions are in life, what friction you're seeing. Again, no matter what you invest or, you can only make certain systems that even are built for you to succeed, work to you to only a certain degree. If you're not lessening the outpouring of your hardworking income right out of the gate, like we talked before, like the higher insurance rates, the higher, APYs, the security deposits, so on and so forth. So until you have a real understanding of again, what you have going out compared to how you could kind of course correct that, be a savvier shopper, read more into what you're signing up for, when you're signing up for it, and not just always put the power over the table. That's where the education comes in, is understanding what you're signing up for and taking the time to, educate yourself, litericize, the processes, what's there, be involved. So, but as far as how people can continue to empower themselves. The two easy things that we're always going to hear in the industry is save and invest, right? Save and invest. But again, to touch quickly on it, if we don't relieve some of that financial tension in our lives, we're not seeing the fruits. It's, even if you go invest and go buy 10 rental incomes or whatever the case may be, if you're bleeding out at the core, then you're only going to get so much gain. But also taking a look at, what programs out there offer, I've always been a big thing of, if you don't see it or can't access it, you don't think about it, let money work for you. I mean, there's a plethora, obviously, of accounts out there, whether it be money market accounts or, high yield savings or whatever, your own banking institutions, or researching what companies out there are offering. There might be a way that if you can tuck some money away today, maybe in 10 years, that can benefit you or your children. So constantly wanting to sponge up the information of what new products are out there, what, and also the testimonials to them, right? Talking to the people that are using these systems, and I can't stress that enough, is you might be savvy with money, but you might not be a financial expert. So talking to somebody who maybe understands the systems and can kind of mentor you, it's okay. It's okay to not know. That's where we have to have more humility sometimes. Don't, drop the fear spiral and allow yourself to learn and allow yourself to admit to yourself that you maybe could have did better. It's okay. It's like we said, it's okay to fail. You're learning, right? So, but again, it's really just if you want to build for the next generation, I think, for our kids, like I do mine, the biggest thing is relationships, and I guess that's really where I'm going with this is that it matters who you know, how you treat those, and the information you seek. We can't all just, if we could all just build generational wealth on our own, more people would be doing it. So again, that's where the humility, the ego, we have to drop that to the side. Make positive relationships with people that maybe understand certain fields and systems better than you do. And that ultimately can come to your gain. It's okay to have mentorship. It's okay to build those relationships because that's the difference of, in my opinion, generational wealth, right? It's if we want to see our kids have less friction moving forward, the relationships that you start and build today absolutely matter.
Yeah, it's not only okay if you have those, it's like almost a requirement to have that. I'm a big fan of turnkey real estate. That's the system that I use because the ease. It's all hands off of what I do. That's the system that I constructed. But I like this analogy. The same way you could have turnkey real estate, I'm a big fan of having a whole turnkey wealth building team. Like you should have a CPA, an estate planner, all these different people working cohesively together to support you. What I found is people tend to get pretty siloed. It's just I'm going to do everything myself, or I'm going to be my own CPA. I'm going to go to whatever baseline systems that are out there. That's kind of a sketchy situation to go into. There's such a variance in
Mhm.
terms of a skill with different financial professionals. Like you really have to network and seek that mentorship to get plugged into those better locations. Like case in point, a major in the army does not mean jack shit. Just because you're a higher ranked than someone does not mean that you're competent. Just because similar to a CPA, just because they have CPA after their name and they could file taxes does not mean they're qualified or even, well, qualified may be the wrong word, doesn't mean they have the skill to do tax planning and tax strategization. Like those, there is a hierarchy there. And but again, you have to seek out mentorship and seek those connections and treat them well. AKA, don't be a piece of shit.
No
And
doubt.
that is important to assemble your wealth building team. So I just wanted to highlight what you said there.
Yeah, no, man, and actually, and kind of throwing it, at you, because really watching you build your platform here, um, specifically, as somebody like yourself who's kind of built their platform around purpose and relationships, right? And given your military background, or even, your tie with the jujitsu community, for you, one question I'd have for you, and I think, is always great for those out there to hear is, what from that background, particularly, like I said, whether military or jujitsu, what what's one lesson particularly that maybe stands out to you, that still to this day influences, the business decisions you're making?
Yeah, I think failure. Failure, I really learned the concept of failure. We talked about that throughout the conversation.
Yeah.
When I was getting to West Point, I honestly not to don't want this come off wrong, but like I didn't really experience too much failure. I was straight A student, that was doing all these right things and everything. I didn't fail the way I should. And that's something the military and jujitsu taught me a lot. There's a school called Sapper School. I'm a little tab over there on my West Point thing. But I failed that school the first time, and I had to do the entire thing over again. It was extremely challenging course. I finished the full 30 days, found out I failed, had to go through another 30 days of, getting my teeth kicked in. So that was a huge lesson learned. You experience failure in the military. As a junior officer, you get thrown a lot of stuff at you, and it could be kind of challenging to balance everything. So experience failure all the time in there. And then jujitsu it's a daily concept of failure. I go into class, even in a teaching position now, and I don't know what I'm doing sometimes. Like you fail against people that are better than you. There's always going to be someone that's better than you. But what was so important for me was to learn how to fail. You get back up again and just go back in it, because before I would get really kind of angry. I would get angry and upset, ashamed. I would get really aggravated, but
Yeah.
that is doing nothing for you. When I was starting jujitsu, maybe I had a bad match or a bad practice. I would drive home with the music off, just kind of sulking in my own misery, like, oh, I suck. This sucks. Why do I do this? When that happens now, and when you start to fail on a consistent basis, you're going to get better and better. It's just going to rub off your shoulder. And now, like, maybe I'll have a sour mood for a little bit, but I know that's going to make me better. And that's the whole cycle. You could bring that back into what you do. It's going to make you a better person. So to recap, failure, that's the big
I
lesson that
love that, man. I love it. And I wholeheartedly, I agree. It's like you said, the fear of failure, we have to find a way to overcome it, because, one thing that I believe in wholeheartedly is consistency over intensity, right? I know plenty of people in the
Yeah.
business
Yep.
world,
Sure.
that went headstrong and they've disappeared, so to speak.
Mhm.
And those that can have the consistent actions and put it into play every single day and learn something every single day, and not be afraid to put themselves out there and fail. We got to put that fear away, man, because it transcends into every bit of your life. And that's where, again, where my biggest pride in my industry is helping people that, right? I rarely almost look at it like I'm helping somebody's credit profile, more so than I'm helping them kind of get over the hump from a life event, right? Because that's
Yeah.
usually what it is, whether it's divorce or loss of a job or loss of a loved one, a failed business, right? It's people stop answering the phone, people stop looking at the mail, people stop looking at their books because of the shame, right? That's kind of tied into that. And for me, getting people the moment, the understanding, and help pave the roadway to have a couple of wins and see that consistency is really the key to it, the education and the consistency, and see them grab that momentum. It's an amazingly rewarding feeling, and I'm happy to be along the way of their journey. So I'm really glad that you said that, man, because that's it. If you're not failing, you're not trying. So it
And
doesn't close the door. You just got to keep going.
it sucks because that's the way we're taught that failure is bad. We're kind of like indoctrinated in these schools. Like, the bell
Yes.
goes off, we pick up, we go to class. It's like it's modeled after a factory, like to make us obedient and everything. Teacher asks a question and people don't know it. They don't want to answer the question. They don't want to raise their hand because we've constructed the society to where if you get that answer wrong, kids point and laugh at you. Like that's kind of a, I don't want to say unique in America, but that is something that we created in this culture.
It
Changing
is.
that
It's
mindset to
where
say it's
shame
okay.
begins.
Yeah, yeah,
Yeah.
it's okay to fail, and like you could go out and go do that. And this is both important to us, reshaping that mindset and teaching people um, that finance and mindset are kind of connected, and we want to do better and teach more education and everything to get people into a better location, because cat's out of the bag. I think we could all realize this from the past 5 to 6 years of being an American, but corporations and governments are not going to save us.
No.
I think it's a fact at this point. I think if you don't realize that that's a fact, might want to hit the books. But people are going to save people. Corporations, governments are not going to do that. And that is the big movement behind what I'm doing with my platform. That's a big point of what you're doing. But yeah, I just wanted to throw that out there because I think we could all realize at this point, something's going to
Yeah.
have to change. Leaders have to step up to the plate, truly, not trying to be an alarmist, but I think if things don't change in the next 10 years, we're going to have a vastly different image of America. And that's not good. That's not good at all. Of course, with all of its flaws, its messed up nature and everything, we really got to step up to the plate and start helping people because the system is absolutely broken.
No, I wholeheartedly agree, man. And again, brings it back to people help people. It's so true. And I think, kind of just piggybacking on that, we live in the society today that we lean on technology for so much, but that kind of ties into big corporate, right? As far as we lean on these technologies, and that's where I really stressed on people being more involved and hands-on in their own finances, and bringing it back almost to an old school mentality at times, because when we lean too hard on the technologies that big corporations build for us, we're sold on the benefit of convenience, but it kind of dehumanizes and almost skews the reality of the situation you're really in. If everything's just super convenient, it's easy to just kind of put off. And it's I agree with you in every sentiment you just said. And I think that, if we get more involved, if we put the ego aside, if we build relationships that actually are going to matter, offer what you have that can benefit someone else, and take the mentorship, and, because that's what leadership really is. It's about those relationships and how we can help one another. Yeah, man, it's the writing has been more on the wall than anything in the last 6 years. And I think, it's important that we do say it out loud and take control of ourselves first. That's where it begins, right? We can't gain, we can't give to the world until, we've mastered our own foundation.
Love it. Keep talking, keep learning, keep helping. We're out of time. Is there any closing message that you want to throw out to listeners?
Yeah, again, obviously, Austin, thank you so much for having me on. It's been a pleasure. I've been really looking forward to this, and I love, what we've highlighted, and I hope we can do it again.
Too, man.
But anyone listening, if anything that we talked about kind of resonates, or anything that I may have been able to say resonates, if you feel that you're behind financially, it's just really important to go back to the tagline that I said: consistency over intensity. Remember that we can't fix, as much as we want to, certain things in this life with one big action, right? Is look yourself in the mirror. Don't allow yourself to fall down the shame spiral, and realize that multiple actions consistently on a day-to-day basis will get you, even if it's not as fast as you want, it will get you where you need to be. And you need to be realistic with yourself, hold yourself accountable to keep that schedule. And I promise you, with those actions, financial freedom is absolutely achievable.
Good stuff. Hey, what's the best way people could get a hold of you? What links should we drop in the description?
Yeah, no, definitely. Please check out our website at www.requalify360. That's requalify360.com. Again, if you're looking to just have a consultation or a conversation, you can get on my calendar that way, where I can personally even reach out to you. And certainly, as we build other social media platforms, the biggest one right now to shout out is our Facebook. You can check us out at Requalify360. Certainly feel free to message us, like and share our content. But you can get in touch with me directly there as well, and we start the conversation.
Okay, outstanding, man. Hey, I really appreciate your time, and we'll have you on again here sometime soon.
That sounds great, Austin. Thanks so much for having me.